Welcome back, traders. I'm going to be watching another ICT lecture today and giving you my thoughts. This one is his Storyteller series and it's a special one because it's going to be talking about Forex, specifically the EurUsd pair on June 5th. As always, the original video is linked in the description. Let's go ahead and check this one out.
We are looking at the weekly chart of the dollar index, okay? And let me preface it by saying this. You should know by now that there's all kinds of things going on as it relates to global trade. The tariffs are on, the tariffs are off, the tariffs are going higher, the tariffs are going lower. It is constant chaos. And it makes the markets a little bit more difficult if you're constantly looking at fundamentals, okay? Because fundamentally, it's insanity if you're trying to trade fundamentally. You have to be trading technically. You have to be looking at how the market is being manipulated to hurt individuals, okay? And none of this is good for the dollar index, okay? Let's just make it very plain and simple. There is nothing good in any of this for the dollar at all, okay? So, in fact, it's beneficial for everyone for the dollar to go down from where it is right now. Everything's just warped. And a higher dollar, a firmer dollar, is not something that a lot of the big wigs actually want right now.
By big wigs, he's talking about smart money. He's talking about the government. He's talking about central banks, the ones with near infinite money that actually control the markets. Now, one theory I have, and by the way, this is my own thought, nothing directly from ICT, so take it as you will. But overall, the trend and the hype right now is crypto. Governments and banks have been putting money into it. So if the dollar drops, then that will help inflate other money alternatives like crypto. But anyways, fundamentals, they're somewhat subjective. Every story can be spun in its own way to explain why the market is going up or going down. Just depends on how it's presented. But when you look at price action and technicals, all you need to understand is where is liquidity, where are inefficiencies. This will tell you where the market wants to draw to and where it wants to accumulate. So at the end of the day, no matter what fundamental news story is broadcasted, I only find truth in price action.
This buy side and bounce sell side efficiency on the dollar index. And again, this is a weekly chart. Keep your eye here in the upper left-hand corner. Whenever I'm changing chart timeframes, you'll be aware of what I'm using. So this here, we traded down through it a few weeks back. So looking at this inversion fair value gap, we rallied up into consequent encouragement of that, filled in this inefficiency here with the bodies. Notice that. Okay, so the wick was allowed to go up into the inversion fair value gap consequent encouragement there. And then we had a volume imbalance, which traded up into here last week, touched that, and then now here's where we're at. I like the idea of seeing it eventually. How soon, how fast will it get there? I don't know, because there's so much manipulation right now. And if you're brand new and you're trying to trade Forex and you're undercapitalized on top of it and you're impulsive, you don't have a model, your chances of being profitable trading that asset class is next to zero. Okay. Let me be upfront and honest with you. It is so difficult right now trading the Forex markets. I have done it a few times in the period of time where I actively moved away from it, where I'm not actually putting real money behind the trades. This climate, this global chaos that we're seeing, this was actually explained to you. It was coming in a lot of the Twitter spaces I did. And just look at it. It's wild, right? It's just insanity. And it's going to get worse. And it's going to be great for the index futures. It's going to be great for the commodity market. But for Forex, we're just waiting for the next shoe to drop. That's basically what it is. Once that happens, the Wild West, big ranges, big extrapolated price runs, that's coming. I think it's going to be here before Christmas. So I have optimism in that regard. But until then, you just got to be really, really careful, folks. So I like the idea of this low being traded down to. And if it can get to that low and accelerate, the sell side below here is where I think we'll try to gravitate to. Now, it's not a lot in terms of range, but that's what I believe is likely to occur. I'm not bullish at all on dollar index. I'm not at all, even though we went down below these relative equal lows and people might think, okay, well, that's some kind of a fake break and then go higher. I'm happy to be proven wrong, but I just don't see it, folks. I mean, the necessity for all things coming into alignment to cause this to go higher based on all the things that's going on right now, I don't see it in the cards. Okay, so I believe that the stock market is not done going higher. I believe that we are still risk on in that regard. But So I think this is a risk on market, meaning that the dollar index is likely to trade softer.
So yeah, I haven't looked at the dollar index for quite a while. This weekend, I'll make sure to do a higher time frame analysis, so stay tuned for that. But yeah, I do agree with ICT. Now this is a weekly chart, but from what I can remember on the monthly chart, we had a really large inefficiency here. And I thought if we failed to trade above that, then we would be heading much lower. Now I don't know if this is the price level that I'm thinking of, but on the monthly chart, there are obvious relative equal lows, meaning a lot of sell side liquidity below there. And that's where I think we are going to be heading in the long term. But I'll do a top-down analysis this weekend, going down to the daily chart and maybe even the 4-hour chart to give you all a more detailed analysis.
This is a daily chart. You can see that up here. Dollar index, beautiful consequent encouragement of that weekly inversion fair value gap. Trading up into the weekly volume imbalance, beautiful. And this low is near-term sell-side liquidity, then this liquidity pool. And then because I like both of these here, remember that on the weekly chart now, okay? All I did was took those same levels I annotated on the weekly chart. By dropping down to the daily chart, it transposes those same levels here through the lens of daily candlesticks. Any PD array, okay? Here's a little secret for you. Any PD array that I annotate on my charts, if they have a respectable amount of range between them, and in this sense, these two are fitting the bill for that. Between these two levels, half of that is event horizon. That is every PD array, every single PD array. Now, right away, some of you skeptics, those ideas cause you to feel like, well, of course, then if you have 1,000 lines on the chart, eventually the market's going to hit one of them. But I'm always calling the ones that I believe are going to be salient. That's the part you keep omitting in your commentary or your little rude remarks. So I believe that this low, this specific higher time frame sell side liquidity pool from the weekly chart, halfway between these two red lines here, you want to annotate on your own chart. Okay, so that will be event horizon, and then this sell side here. So I am not bullish on dollar index unless something comes out and world peace is is discussed and Iran no longer wants to do anything with nuclear, and North Korea says we're not going to be involved with anything. Russia says what, Ukraine, you can have everything, we don't want anything, and it's not happening, folks. That's my point. Okay, Taiwan's not going to get invaded by China. All these things would have to smooth on out, and this is not happening. Okay, it's not happening.
Yeah, I wish we had world peace as well, but it seems like everything is swinging towards the opposite spectrum at the moment. Okay, that's the last time I'm going to remark on global issues. Let's just stick to the charts. So this part is really interesting. We got a little bit more information on his event horizon PD array. Now go back a couple minutes if you missed what he said, but event horizon was first introduced, I believe, in the 2023 mentorship. That was when he really emphasized on new week opening gaps and new day opening gaps, NWOG and NDOG. And he was using the midpoint between two new week opening gaps as the event horizon. Now here, he's using two swing lows, or two pools of liquidity essentially, and taking the midpoint as the event horizon. Now, we still don't know a whole lot about event horizon, but the main idea is that once price crosses it, it'll want to rapidly gravitate towards the next pool of liquidity. So here on the dollar index, if we cross halfway between these two pools of liquidity, price will want to quickly drop for the next swing low. And I'll make sure to point this out, this event horizon, in the analysis I do this weekend.
We're in an hourly chart now. So this imbalance here, buy side balance, sell side efficiency, when we traded down through it, it acted as an inversion fair value gap. So I'm waiting to see if the bodies are contained inside of this, and then if we roll back outside of it. Now, if we trade higher, I gotta charge my battery up, but we're gonna keep that in the video. If the dollar index trades higher and trades above here, then it just means we're just gonna hang around and go sideways for a little bit longer time. But longer term still, I think that the dollar is still most likely gonna be delivering lower prices. 15-minute time frame, same business that is outlined on the hourly chart. We're using the hourly inversion fair value gap. This is not the same one that was on the weekly chart, by the way. And we just saw this drop down here today on employment data. And this sell side bounce buy side efficiency is an inversion fair value gap. So we can start looking at all of these specific key levels, the quadrants inside that, and trade up in here. Notice the body staying inside that inefficiency from the hourly chart. If it rolls out of it and comes back up and hits it as a low, I would want to see it trade down into that inefficiency, and it has to eat up all of these levels decisively and trade with the close below them. And then any drop below this low here is most likely going to be sustainable. And then 5-minute chart here, dollar index, you can see that there is a buy side sell side efficiency inside of that 15-minute time frame inversion fair value gap. So if we go down lower, this area in here should act as an inversion fair value gap that would be used as a catalyst to send us below here and then into that higher time frame weekly lower sell side liquidity pool. So this little area here, should we break lower, extend that out in the future, okay, and it's going to probably be a trigger for a ramp into this low and then further lower. $1 weekly chart. Okay, we have an inversion fair value gap here. We saw that be utilized. Bullish fair value gap here, body staying inside of it. And then we're working inside of this weekly premium wick. I'll put the gradient levels in it. We trade up into consequent encroachment. And the next buy side liquidity pool I like up here, because this wick basically took out this short-term high. And this is, I guess, doable. But if it's going to go higher on the basis of a lower dollar, I would like to see it reach up into that full liquidity for EurDollar.
So just a reminder, ICT outlined how he is bearish on US dollar. So with the EurUsd pair, you can think of this as a fraction for all my math nerds out there. So if we're anticipating the US dollar, which is the denominator, to decrease, then this EurUsd pair overall should increase, assuming, euro doesn't really change all that much. Now that's why ICT is only outlining bullish ideas here. But even with the technicals, we can see rebalancing of this inefficiency, and then we rallied for the buy side liquidity. And then with respect of this inversion fair value gap, we should be looking for continuation.
Daily chart and same levels from the weekly chart transposed into the daily. This is a little problematic for me. I'm not terribly excited here. So for me, I would like to see sustained continue price run to take out this high. I don't want to see anything come back down into the weekly bullish fair value gap, which is what this blue box is here. Remember, the weekly chart levels are being shown on the daily. And I certainly wouldn't want it to come back down into this because it's already done its business here. So we've already seen the inversion fair value gap act as an inversion fair value gap that's bullish. Then the low of the fair value gap here, and then it stopped just shy of consequent encouragement right there. Notice that? That's bullish for me. And I want to see non-farm payroll data tomorrow facilitate continuation to the upside for EurDollar. That would make it a little bit easier for me to give continued commentary and opinion about what it's likely to do. Unless it does that, then I'm just going to keep my cards close to my vest and just expect lower dollar, higher euro, but any individual specific key levels in here would have to be mentioned at a later time because what is on this chart right now is pertinent for me. 1 hour chart. Okay, now this one here, I think start over here from the left side of the chart. This is that weekly bullish fair value gap that did not go down consequent encouragement. Then we have buy side balance, sell side efficiency. It comes down to consequent encouragement. The bodies respect that. This is a sell side liquidity raid and ramps it up higher. Trades into the lower quadrant of that weekly premium wick. This is the low of it. Lower quadrant, consequent encouragement, and in the upper quadrant and the high of that wick is outside the scope of this chart's data. Then we have an inversion fair value gap here. Now this is something for your notes, okay? Whenever there's an indecisive candle like this, I take that out. I just imagine it's not there. So that low to that candle's high, that one down closed candle, that's what I'm seeing as a fair value gap. I'm not looking at this wick. I'm not looking at this candlestick at all because both of these candles here traded that range and it closed where it opened. So I don't care to know that data in the formation of my fair value gap. So this low and this candlestick's high, that's being shaded there, that's the fair value gap. You can see it being used there with the bodies. It's being respected there also. And then we came down to the high of it here and then worked a propulsion block, which is a bullish order block here that only goes down into a previous order block, but it cannot trade lower than half of its mean threshold or mean threshold of its body. And it doesn't do those things here. And it trades to the low of the wick on that weekly chart right there. And then we saw the acceleration to the upside. I'm watching this area here to act as an inversion fair value gap because it also worked that level here, and now we're on the other side of it. So I would like to see it continue staying firm. If we just melt down and go overnight lower than this low here, then all bets are off and we'll have to see what we get next week. But I would like to see continuation there. Now remember, I'm not trading Forex, so don't take any of my commentary here as an invitation for you to go out there and start trading. Okay, because if I'm wrong, and in this climate, I could very well be wrong, which is the number one reason why I've not been talking about Forex, because there's too much manipulation and the ranges aren't worth the risk.
Okay, so you think you know fair value gaps. You think you've learned all there is to learn about fair value gaps, and then boom, ICT drops a new piece of information. Now I zoomed in here so it's easier for you to see exactly what he's talking about. Now I never heard him mention this before, specifically for fair value gaps. There has been slight mentions from him where he ignores these doji candles, but those were due to high impact news events where the candle is highly volatile and creates a doji when news is released. This is the first time he's expressed that same mentality for fair value gaps, at least from what I can recall. So instead of a typical 3 candle formation, it's a fair value gap with 4 candles, ignoring the second candle since it's a doji. Of course, this is a rare occurrence, but definitely make sure to put this in your notes.
Right, 15-minute time frame, buy side liquidity here, really smooth highs, and that propulsion block shown there. Sell side liquidity pool raid went higher, all that business shown here. And again, I don't want to see that inversion fair value gap give up the ghost and trade back down lower than that. Because even though this has gone up and it's sold off, to me, I would use that as an indication that retail would see that as a rejection. It's going to go lower. When the dollar index is likely to go lower, that would not be the case here. So I'm not scared by this right here. I know this was the result of employment data, and non-farm payroll can always upset what was done on a Thursday of non-farm payroll week. So it was the decaffeinated version of employment data released today. The real show is going to be tomorrow at 8:30 Eastern time. And the 5-minute chart here, we're inside this buy side balance, sell side efficiency. These two relative equal lows, at the time of me starting this recording, I had already noticed that it went below here. So it was one of the things I was going to talk about, how if we go below these lows, does it go back up and start working into these levels here like this as a bullish inversion fair value gap, eventually working back up into the high. I'm not interested in seeing lower euro and higher dollar, and I don't think that's likely to occur. But obviously, non-farm payroll tomorrow, all the disadvantages that I would see against me as an analyst going over these markets, I'm trying to be transparent and share that. So unlike I have been with index futures, where I was basically coming after like John Wayne saying this is what's going to happen, I don't have that same confidence in Forex. So just make sure that you're aware of that going in. Don't get goofy and think, well, I'm going to go in there and over leverage, because if I'm wrong, and again, I could very well be wrong. Euro could just collapse and the dollar just spike up, go crazy. Wild stuff can happen any minute. I mean, just look what Elon Musk is putting on on the X today. It's getting crazy, right? So just be mindful of all that stuff.
So he threw me off there at the end. He said 5-minute chart, but it's still the 15-minute chart. I think he just had the wrong slide displayed. Anyways, his overall bias for euro dollar is bullish. He's bearish on the dollar. But 2 things that really stood out for me in this lecture was that 4 candle fair value gap formation where you ignore the doji candle, and the new piece of information we have on the event horizon when you look at 2 pools of liquidity. So technically it's not new, but he's made subtle hints at it before, but this is the first time I heard him use the words event horizon when talking about this. So that's it for this lecture. I hope you got something out of it. Please give this video a like and subscribe for more ICT lecture coverage. Also, if you have time, please leave a comment, as that really helps promote me to the algorithm. But with all that said, I hope you have a great day, and until I see you next time, safe trading.